I think it's an unambiguous positive that has fallen as precipitously as it has. But that said, quite frankly, at this point in time, I think the market would welcome price stability. I think if oil continued to plummet and we break through $40 a barrel, I think the worry would be increasingly that the equation of is it an abundance of supply or lack of demand would start to lean more heavily toward the fears of lack of demand. And as a consequence, it would undermine equity values. But because we're starting to see perhaps some at least intermediate floor coming into oil prices in here, I think the market is bidding on that or biting on that, that is, and getting a bid as a consequence.
I think for the Fed, the hard part is you're trying to make the markets understand that when and if they do move, it's not going to be the traditional type rate hikes that they have done historically. And that's the problem. That's what they have to try to transmit. And that's why I honestly think the rate hikes are going to come later rather than sooner, because we have to get people comfortable that this economy is well on the way to 3% plus growth on a sustainable basis.
You don't think we're there yet?
Can do that. No, we've had 2 quarters of good growth. There's no doubt about that against a very, very weak first quarter. The average for this year, even if we have 3% in the fourth quarter, is going to be 2.5%. That's where we've been on average over the last 5 years.
What about the notion that a lot of the members saw April? Something as early as April.
Well, again, a good number of those members have rolled off of the voting side of the equation. So now when you look at the members that are on in terms of the voting side, it's certainly later rather than sooner.